Bitcoin is rallying spectacularly towards the upside, getting very close to new all-time highs. So does that mean that this 4-year cycle theory is invalidated? Is the 4-year cycle broken? We'll be talking about previous 4-year cycles and what else we should be expecting going forward. So subscribe to the channel for more videos like this in the future. Like this video if you enjoy videos like this going forward, and let's dive right into it. So is the 4-year cycle broken? In a nutshell, the short answer is no, it's not, because we are simply going towards the upside a little bit ahead of schedule. So if we go to this chart, which was from early January, late January in fact, but early on in this year, we were seeing that candle 4 was rejecting from this 4-year cycle resistance, but the whole thesis was that we always see candle 4 break beyond this 4-year cycle resistance later on in that halving year. Because candle 4 is a halving year and it precedes phenomenal upside in each cycle. So the thesis always remained that we were going to break beyond this 4-year cycle resistance, because in candle 4s, this just typically is the case. But the whole thing is that we broke a little bit ahead of schedule. Historically, candle 4 tends to break beyond this 4-year cycle resistance only after the halving, whereas now we're approximately 45 days before the halving and we've already broken beyond this 4-year cycle resistance. So in terms of the candle 4 and the 4-year cycle, this is still very much on track. When we're looking at the 12-month time frame, nothing is out of the ordinary in terms of candle 4 breaking beyond this 4-year cycle resistance in the candle 4 year, which is the halving year. This isn't out of the ordinary. What is out of the ordinary is the fact that it has happened a little bit earlier than historically is the case. This has happened in the pre-halving period as opposed to the post-halving period. So we are a little bit ahead of schedule. We've been talking about this in previous videos, that Bitcoin may be enjoying a growth spurt where it's overperforming in terms of what has historically been the case. But when we look at historical performances in the 60 days before the halving, we tend to see pre-halving rallies, and this is a pre-halving rally as well. But the point is here that this is overperforming, this is outperforming. So if we compare this pre-halving rally to this one, then obviously they're both pre-halving rallies, but this one is simply outperforming that other one. But if we were to take a snapshot of this 2023 accumulation range and just compare it with what was happening at that same point in the cycle in 2019, then it was visibly underperforming. We were in a strong uptrend in 2019, and here we were just consolidating for multiple months. So based on the historical norms, we were underperforming at this moment in the cycle, and we're overperforming at this moment in the cycle. Do we then transition soon into a period of underperformance or just average historical performance? We'll see later on as we approach the halving event, which is where we should probably see a last pre-halving retrace. If that pre-halving retrace does indeed occur, maybe we'll slightly mean revert from a period of overperformance into just reverting towards the historical average, maybe underperforming slightly as we consolidate in this reaccumulation range after the halving. Historically, that's what we've seen after a pre-halving retrace, just sideways price action after what was an explosive pre-halving rally. I wouldn't be surprised to see a pre-halving retrace followed by some sort of sideways movement for a few months, because this vertical price action, it's wonderful, it's exciting, but it can't continue forever. So this pre-halving retrace is going to likely occur, whether it's just 10%, 15%, 20%, maybe 25% if we're lucky, but a retrace does need to occur for that's always going to be a healthy thing in a cycle. So this pre-halving rally is going strong, and it will still go strong for a few more weeks, but before the halving is probably where we're going to start seeing some topping out. And I've spoken about where that potential local top could be in the Pi cycle video that I released earlier on, so feel free to check that one out. But in terms of the 4-year cycle, so in terms of the 4-year cycle, we actually know that we're not really deviating from it, because candle 4 is still breaking beyond this 4-year cycle resistance, and we'll still see candle 1, for instance, that's going to still continue and go higher. Historically, candle 1 always goes higher than candle 4. So you can see candle 4 here, candle 1 being higher than candle 4. And obviously, we're probably going to see candle 1 be higher than candle 4 in 2025. But that's all still very much in line with historical norms. But the difference here, and this is a chart that showcases the best, is that we've broken this macro diagonal in the pre-halving period. Historically, we always tend or have tended to reject from this macro diagonal. Going into the halving, we've rejected from here, and only after the halving, we've managed to reclaim this macro diagonal as a new support to rally to new all-time highs. So in 2016 as well, rejection before the halving, and then reclaiming it as a support after the halving. Whereas now we're actually positioning ourselves for the very first time ever. Bitcoin is going against the grain of history and positioning itself for a monthly candle close beyond this macro diagonal resistance, and who knows, at some point in the future it's going to maybe turn it into a new support, or maybe it skips that technical step altogether. Things are really changing quite dynamically, so it is going against the grain of history. Will it then revert to holding in line with historical norms and revert to following history with a potential retest of this macro diagonal? Time will tell, but the thing about the 4-year cycle is that it's not broken. It's only that we're seeing these phases occur a little bit ahead of time. So if we focus on this phase, for instance, where we're successfully retesting this macro diagonal as a new resistance before rallying to new all-time highs, this essentially, what we've also seen around here, this is what we're seeing just before the halving. So instead of after the halving, we're a little bit ahead of schedule, maybe 2 months or so, maybe even 3 months ahead of schedule, because typically we've seen this sort of retesting and rallying to new all-time highs 200 days after the halving. So if this was 200 days after the halving, and this retesting and rallying to new all-time highs was also after the halving, technically, we should have seen Bitcoin rally 200 days after the halving, after retesting this to new all-time highs. But we're actually 45 days before the halving event, so 200 days, 214 days after the halving, plus 45 days. So that's roughly in total 260 days that we might be seeing some sort of acceleration. And I've talked about this in a previous video. Are we seeing an acceleration in Bitcoin cycle by 260 days? Maybe that's the case. But in terms of the 4-year cycle, the 4-year cycle is blind to that acceleration. If we're just looking at the 12-month chart right over here, then this 4-year cycle is just following its historical tendencies. It's breaking the 4-year cycle resistance as it tends to do in a candle 4. This has always been the case, but it doesn't account for that 260-day period, potential 260-day period of acceleration in this cycle. But having mentioned that, we have mentioned that there is overperformance in the market. We saw underperformance only a few months prior. So of course, we may be overperforming right now. We were underperforming. But if we then revert to the average and underperform in the coming few months, maybe we also consolidate like this in the immediate aftermath of the halving. If that remains to be the case, as per history, then maybe we do enter a period of underperformance. So that 260-day period where we're accelerating potentially, if we do start to consolidate for multiple months after the halving, well, then we're going to eat into that acceleration, right? And if this reaccumulation and consolidation continues for multiple months, then it's going to make this acceleration period of 260 days narrower and narrower and narrower, and then maybe we don't actually have an accelerated cycle in the end. But many people are going to say that we have an ETF, that the ETF is offering demand that we've never seen before. The catalyst, that is the halving, is going to cut supply of Bitcoin in half. The amount of Bitcoin that get created every 10 minutes is going to get cut in half in mid-April. We're going to have a supply shock. We're having a demand shock. Then as a result, can we really think about a boring post-halving reaccumulation range that goes on for several months, as has been the case in the past? Can that feasibly happen? Historically, that's been the case after a supply shock, but in this cycle, we also have a demand shock. So in conjunction together, maybe we won't see that sort of reaccumulation period post-halving boredom and impatience where people are impatient with their positions and price just goes sideways. But there will be and there has to be a pullback of some sort and a consolidation period of some sort as well to continue moving higher. That's simply the case, because these are healthy pullbacks, healthy moments of stalling that enable the next future uptrend. So at the moment, overperformance. But this 4-year cycle doesn't see that overperformance, because technically the 4-year cycle takes into account a broad enough time frame that it can withstand overperformance in the short term and then mean revert to underperformance in the short term as well, and the 4-year cycle remains just as is. So is it broken? I don't think so. Maybe some acceleration. Generally, the 4-year cycle is still intact, and let's see, maybe we enter a period of mean reversion and underperformance in the coming months. That would be totally healthy. It's what has happened in the past, so let's see how things happen. But the 4-year cycle isn't broken. In fact, everything is progressing as per history if you look at previous 4-year cycles. Thank you so much for watching. Subscribe to the channel for more videos like this in the future. Like the video if you enjoy videos like this going forward. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.